Hey everyone, and welcome back. Before we dive into today's numbers, just the quick but super important reminder. This is all for educational purposes, and it is definitely not financial advice.
All right, let's get right into it. This is the DexFi Health Report for December 26th. And wow, after a little bit of a dip on Christmas Day, the story today is all about the comeback. We're seeing a really strong rebound across the board. So let's just jump straight to the headline number. And there it is, a solid gain of 0.81% in just the last 24 hours. This is exactly the kind of bounce we were hoping to see. It really proves the protocol's resilience after that little holiday dip. It's just a fantastic sign.
So here's our high-level dashboard, and you love to see it. It's green where it matters most. The fund value is back up over $1.57 million. We've seen a pretty significant jump in total bonds, and the APR is settling down, stabilizing right around that 28.5% mark. This is precisely the healthy response we wanted to see.
So the big question is, how did this recovery actually happen? I mean, it wasn't just luck. It was the protocol's internal mechanics really firing on all cylinders right through that volatility. So let's break down how the system worked exactly as it was designed to.
I mean, just look at the scale of this swing. We went from a low of around 1.565 million yesterday to over 1.577 million today. That's a recovery of more than $12,700 in a single day. A textbook V-shaped bounce.
So how did we pull this off? Well, it was really a two-part process. First, the underlying assets inside the vaults, they stabilized after that holiday sell-off. But more importantly, the protocol's 50% compounding mechanic just kicked in perfectly. It automatically reinvested trading fees at those lower prices, which basically means it was buying the dip on our behalf.
But you know what? The fund's recovery is really only half the story. The other piece of news today, and you could argue it's even more important, is the powerful signal of investor confidence we just saw.
52. Just let that number sink in for a second. 52 new bonds were minted in the last 24 hours. To put that in perspective, in the context of the last few weeks, this number is it's massive.
This wasn't just a good day. It was the single strongest day for new bond minting that we've seen in our entire tracking period. This is a huge statement from the community. And think about the context here for a second. This record-breaking day for bonds happened despite the recent dip, despite the APR coming down from its highs, and despite the general slowness and uncertainty of a holiday market. This is investors voting with their capital. It's a signal that they believe in the long-term health of the protocol.
And this isn't just a one-day thing either. If you zoom out, we've seen nearly 1,400 new bonds added in just the last 16 days. That shows a really consistent flow of new capital strengthening the protocol day in and day out.
Okay, let's address the elephant in the room, trading volume. It's down. But before anyone gets concerned, it is absolutely crucial to put this number into its proper context.
So today's trading volume was just under $6 million. And yeah, compared to our recent average of about $8.5 million, that's a 30% drop. But there is a very, very simple explanation for this.
Let's be super clear here. This is completely normal. The day after a major holiday like Christmas is almost always a slow trading day, across all markets. This isn't a red flag. It's just a predictable seasonal pattern. We fully expect activity to ramp right back up as we get closer to the new year.
All right, now let's look under the hood at some of the other internal health metrics. We'll start with the Treasury wallet, which is also looking quite strong. So the Treasury wallet's value has increased by nearly $3,500 since yesterday, and it's now sitting at almost $94,000. You can see the protocol is strategically accumulating ETH from trading fees, which now just totally dominates the wallet's holdings. So let's just break that down. The wallet is up, and it's holding over 1 full ETH more than it was yesterday. The deployment rate is a super healthy 94%, which means most of the capital is out there actively working. This is just smart capital management, accumulating reserves during a quiet period to be deployed when opportunities come up.
And it's really important to note that this recovery isn't isolated to just one part of the ecosystem. We're actually seeing a broad-based recovery across every single chain that the protocol operates on.
Just take a look at this breakdown. Base, BNB Chain, Sonic, Avalanche, every single one of them is in the green. Base Chain alone saw a $6,000 increase in total value locked, with BNB up over $2,000. This just shows that the entire system is healthy and it's recovering in sync.
So, after reviewing all the data, the fund value, the record bond minting, the volume context, and the internal health, it's time for our final verdict.
And there it is. Based on today's really strong performance, we are officially upgrading the protocol status from monitoring right back to healthy. And this is an upgrade that feels completely earned, reflecting the system's incredible resilience.
So, just to recap the reasons for this upgrade, the fund value bounced back decisively. We saw that huge vote of confidence with record bond minting. We've contextualized the low volume as just a normal holiday pattern. The APR has stabilized, and that recovery is happening across every single chain. All signs are pointing to a healthy protocol.
So what's the big takeaway today? Well, the Christmas dip looks like it was just that, a brief pause, not a change in the underlying trend. The incredible confidence shown by investors minting 52 new bonds, that just speaks volumes. As we move past this holiday lull, we expect things to continue stabilizing.
And we'll end with our final crucial reminder. This is not financial advice. Please never invest more than you can afford to lose, and always do your own research. Happy holidays, and we will see you for the next report.